Hey guys, in today's video we're going to be talking about those evil car loans and how they're taking more money out of your pocket than you think they really are. And if you stick around to the end, I got 3 power hacks for you to keep more of that buying power in your own pocket. Hey guys, welcome back. It's the Real Bearded Businessman, and I want to thank you for coming back if you're a repeat viewer here. And if you're new, this channel is all about helping find your financial freedom and about me explaining a lot of the things that I've learned throughout my process and hopefully shortening that learning curve for all of us. So hope you guys enjoy it. If that sounds interesting to you, why don't you hit that subscribe button and ring that bell, because I don't want you missing out on any of the great updates we have on this channel. And yeah, so let's get started here, all right? So, oh, and I almost forgot here. Like I said earlier in the introduction, if you stick around, we have 3 power hacks for you, and that'll really help you keep more of that buying power back in your own pocket, all right? So let's get started here, guys, right? So what we're going to be talking about today is the dreaded car loan, or that dreaded auto loan, and how in a lot of ways it's taking a lot more money out of your pocket than you think it really is, right? So let's get started on what an auto loan really is, right? So essentially what an auto loan is it's, you're going to go buy something that you do not currently have the amount of money that required to pay cash for it or directly out of your bank account. So you go and you borrow money from a bank or somebody with this money. You borrow it from this bank, and essentially it's an investment in you. And so when you pay interest to them, they're investing their time into you, right? So they know that they're going to give you $30,000 or whatever it is, but they know at the end of the time that they get paid back and they earn interest via that investment in you. And then that's why they're willing to give this money out. If they weren't making any money, they wouldn't do this. It's not how the process works, right? So that's what it really is. It's an investment in you as a person. And one of the other things that I guess a lot of people don't necessarily understand is, okay, so when you go there and you get evaluated and they run a credit check and this, to them, that's evaluating their risk, right? So they're trying to figure out, how risky of a investment are you, right? It's the same thing that you would go through if you're going to go buy a stock or a bond or a mutual fund. What you want to understand your level of risk, right? So you have the upside of making a lot of money, but on the low side, you could lose a lot too, right? And that's why they do credit checks and you have a credit score and things like that. It's a way for them to understand their level of risk, and are they possibly going to lose money on this deal or make money on this deal, right? So that's kind of breaking it down into like layman's terms. I'm not a banker. I'm not a financial expert by any stretch of the imagination, but that's just in very simple terms how it works and why it works, right? So that's why they do that. That's why they do the things that they do, right? So the next question that a lot of people ask is, well, why is my buddy paying 2% interest on a loan, but I'm paying 11%? Like, why the difference? And kind of going back to that, estimating their level of risk, you guys are getting charged 2 different dollar amounts or 2 different interest percentages because they're evaluating him as a less risky situation because he has a better credit score, and they're evaluating you at a much higher risk situation, and that's why you're paying 11%, because they want to get their money up front in case you do end up not paying them or something like that. So that's kind of breaking down what a car loan actually is and how it works. So I hope you guys found some value in that. But so I guess the next step is here, why are they so evil? Why are they so, oh my God, they're taking more money out of my pocket than I thought, right? So I wrote down and I did some things here, guys, and I went off of like last year's rates and last year's numbers because we're in 2019 now and we have all the data from 2018. So let's kind of run through it and we'll go from there. All right, so I wrote it up here on the board. I'll do my best to keep this not moving here. Can you see me? All right. So what I did was I looked up the average car price or the average purchase price of a vehicle in 2018. And it was about $35,000, right? So I threw on an extra $2K for sales tax, all the extra fees and stuff like that. I think that's pretty reasonable. Sometimes it's going to be a little bit more, sometimes it's going to be a little less, depending on the state that you're in. And I feel like this is kind of an average. Some people, if you live in a more expensive state, you're probably going to be up add $3,000 or add $4,000, right? Or a cheaper state, you only add another $1,000. It depends, right? So sorry guys, I'm a little under the weather here, but so this is what this is the average car price with the additional tax, title, and all that other destination charge, delivery, all that stuff, right? So then what I did was I went through and I looked up data on the average car loan in 2018, right? So the average car loan was about 60 months for full term, and it was about 5% interest, right? So that's what I did, and so I figured that was a good setup and a good start to the basis, right? And I know a lot of people, it was tough for me to find the exact data on this, but I know a lot of people are doing the 0 down deals. They seem to be getting a lot more popular, but I couldn't really find, like the average 2018 down payment. So this was kind of tough, right? So I did the math, put it into a car loan amortization calculator, and I ended up finding out that you're going to end up spending $690 a month, right? That's pretty expensive. If you're buying a vehicle for $35,000, add the 2, now you're at 5%. So every month you're paying $690. That's a lot of money to be paying out a month. So that's, to me, that's the big one. That's the first shock, right? Now the second shock is when you really break it down and you look at how much money you're paying just in interest, right? You're at $4,900 over those 5 years or those 60 months. You're paying somebody $5,000 to have that vehicle. So when you look at here, there we go. So when you look at it here at the end, that $37,000 vehicle now costs you $42,000 total. So at the end of those 5 years, you have that loan that's, you started with a vehicle that's $35,000. You've now spent $42,000, right? So you're $42,000 in the hole, and then by the time you pay it off, you go, oh, hey, I still have something that if I ever need to, I could sell or I could dump or I could do this. No, that car is worth probably half of what it was worth. It's going to be in the 20s by the time you're done, right? So you're still, you've dumped out $42,000, and even on the back end, you have the possibility of maybe making $20K at the end, maybe $25K. And that's crazy, right? So I have I have a what if for you, right? So what if you invested some of this money instead of putting it into a car loan, right? So our total was $42K, right? So we got $42K, and what we're going to do is we're going to add in $500 as an initial investment into something, and we're going to throw in $500 a month. Now, that's a lot, but it's a lot less than this $690. And we think we're going to get 5% interest. And I think, obviously, you're not going to do that in like a savings account, but if you were to throw it into something a little bit more aggressive, I think 5% is a reasonable return. A lot of people are saying, hey, like the yearly, what is it? The yearly average return S&P 500 is like what, 7 or 8%. But it's going to go up and it's going to go down. So I think 5% is a nice medium, right? And then we're going to leave that in there for 60 months and not touch it. Well, we're not going to do, because you can't touch that money that you throw into a car loan, right? It's gone. Once it leaves your bank account, it's out of there. So then what we're going to do here is we're going to see how it all stacks up. And I apologize for my writing here. I'm not very good. But I think this one will definitely get the point across, right? So let's go back to the board. So here we are, right? So this is how much money we're out if we just stay with the car loan, right? Buy that $35,000 car. Here's the number. So now what we're going to do is, like I was talking about before, we're going to throw in a $500 investment, first month. And then what we're going to do is we're going to spend $500 every month after that. So we're already $170 less than we were before. So we start there. So we got the 500, right? And that's what we're going to throw in every single month. And we're going to anticipate that we get 5% every year. Keep it in there for the 60 months. And this is what about we're going to be at. So $35,000. That's crazy, right? So, but here's the difference. The difference between this number and this number is this is all yours. This is in your bank. This has the ability to help you do whatever you need to do, right? So you have a number that's $35,000. What do you think you guys could do out there with, even if it's 30 grand, even if it's 25 grand? You know, a lot of people say, hey, you know, I don't really know exactly what I'm going to be able to do with, or I really don't know how to start a business or how to start my own thing, or even pay some of these other bills off. If you have an extra 10 to 15 grand or 30 grand, like, that's awesome. That's totally, you know, that totally helps you out, right? So, and I think that's just a big deal, right? So that's what I wanted to show you is, yeah, it's this number is not this number. Ooh, this number is not this number, but this is all yours. 0% of this is yours. You lost all this, you gained all this. And so I really hope that made some sense to you guys. And I'm not saying that you need to completely change things. I'm just saying it's something that I'm gonna do, and it's something that it's the reason that I'll be honest with you. I don't ever want to get a car loan ever again. They're crazy when you really break it down. Yeah, I mean, it's nice to have a really nice brand new vehicle, but I think from this standpoint, I think, you know, honestly, buying something used, you know, maybe in that $8,000 to $10,000 range is probably the smartest way you could do it, because you pay the money, you pay it out of your bank account once, it's done. The vehicle's all yours. You own it free and clear. And the rest of the time, those monthly payments, you're paying back to yourself, and you're increasing your own financial independence. As I said in the intro, you have, we're going to start getting into these 3 power tips for you, right? So the first one was exactly what I said that I'm going to start doing, which is start finding used cars that are about in that $10,000 range. And, you know, like I said, pay cash for it, and then start putting money into the bank account every month, right? So if you have the money to get the big car loan and you're able to spend the $600 a month, or, you know, what have you, if you're able to do that, why not put $200 a month in an investment, or $200 a month into your bank account, or $250, whatever it is, whatever's comfortable for you. And over time, you're going to find out that that money's going to grow, and you're going to have way more buying power than you ever thought you had, right? So that's the first tip. The second tip is going to sound ridiculous. You could be like, yeah, duh, you know. But I've been in, car dealerships where people don't do this, and it's haggle. You know, you have a lot more power than you think you do when you walk into these things. They purposely try to put the high pressure on you and stuff like that to get you to pay what that sticker says, but don't ever pay sticker. You know, there's a lot of things you could do and a lot of ways that you can go through and say, hey, you know, that's not a comfortable price for me. I like your vehicle, but honestly, guys, I can't afford that. Either come back to me with a better price, or I'm out of here. And sometimes that's all it takes. And at the end of the day, they only get paid when they sell you the vehicle, not the other way around. So make them work for it, you know? And if you could get that $35,000 car for 32, you're already that much difference, or that $3,000 is already, the difference. That's that much better for you, because that's $3,000 less that you're paying on your on that car loan, right? And then so that tip was kind of like, hey, if you're like, hey, I heard you, but I still want to go get the nice car with the nice car loan, right? And then this last one here for you guys is, this is huge. Again, this is another one of, yeah, I heard you, but I still want the nice car with the nice car loan, right? So what we're going to do here is you're going to have to be strong, but what you're going to do is when you guys start talking numbers there at that desk, you want to be talking total car price, not the monthly price, right? So that sounds weird, right? But here's the deal. Every car dealership I've ever been in when I was buying my new vehicle, they always try to break it down to you. Well, what do you feel comfortable with spending per month, right? because that's an easier number for you to comprehend and really figure out. And so it sounds like they're helping you out and making it easier for you. But in reality, they're playing all kinds of games on the back end that you don't ever know about. So when you start going into the negotiations and, hey, I'd rather spend this than this, or, hey, why don't you go take that back and go to the famous, back room and get the crazy price that you couldn't offer me beforehand. Talk total price over the entire vehicle price. And the reason I say that is because when you say, hey, I can afford to spend $500 a month, they're going to find you the financing deal and this and get you the interest rate to make it pop out at $500, but you could be totally getting screwed on the back end. You could be getting a worse interest rate than you think. And to me, I want to know at the end of the day, what am I paying for this thing? What exactly did I pay for this truck or this car or this SUV, minivan, whatever? You want to know what that is. And even if you walk out of there at the end of the day and you get that vehicle, definitely keep looking. Maybe not every month, but maybe every quarter or every 6 months. Take a look and see what those interest rates are doing. Depending on your financial situation, it may help to refinance and, get a lower rate or something like that. So those are just some of the power tips and some of the things I found when buying a vehicle. And I just wanted to, share them with you guys. Hopefully it made some sense to you. And hopefully you got some value out of it, all right? So that's it for me. Hope you guys are having a great week. Hope you guys are having just, a fun time getting more of this buying power back in your own pocket. And until next time, guys, I'm the Real Bearded Businessman, and I'll see you later.